You're in a prison right now, and you don't even see the bars. Let me prove it to you. Pull out your bank statement. Look at the last 30 days. Now ask yourself, where did it all go? If you can't account for 30% of your spending, congratulations. You're experiencing what I call the invisible prison. And here's the thing that's going to make you uncomfortable. You didn't build this prison. It was built around you by people much smarter than both of us who studied your psychology, your insecurities, your dreams, and weaponized them. Everyone talks about how the government taxes you into poverty, but here's what they won't tell you. You're taxing yourself into poverty through your consumer choices. And unlike government taxes, these taxes are invisible, voluntary, and infinitely more destructive. Today, I'm going to show you the 10 manipulation techniques that companies use to keep you broke. But more importantly, I'm going to show you the hidden math, the real cost of each trap. Because a $500 purchase is never just $500. It's what that $500 would have become if you let it work for you instead of against you. Let's break down the invisible prison one bar at a time. Let's start with the most insidious one, subscriptions. Here's what they tell you. It's only $9.99 a month. Here's what they don't tell you. Your brain is terrible at calculating recurring costs. This is called temporal discounting, a cognitive bias where humans systematically undervalue future costs. $10 a month feels like $10, but let's do the hidden math. $10 a month times 12 months is $120 per year. $120 per year times 30 years is $3,600. That Netflix subscription you barely use is not costing you $10. It's costing you $13,600 in retirement wealth. Now multiply that by your Spotify, your gym membership you never use, your Disney Plus, your cloud storage, your meal kit delivery, your app subscriptions you forgot about. The average American has 12 active subscriptions. That's $1,400 a year. That's $163,000 in lost retirement wealth over 30 years. But here's why this technique is so brilliant. They make it painful to cancel. You have to call, you have to navigate dark patterns on websites, you have to remember which email you signed up 3 years ago. They're betting on your inertia, and they're winning. The subscription model isn't a business model. It's a behavior modification program designed to make you forget you're paying. The second technique is buy now, pay later. Klarna, Afterpay, Affirm, these companies have perfected something psychologists call temporal separation, the distance between pleasure and pain. Here's how your brain works. When you hand over cash, it hurts, actually physically hurts. MRI studies show spending cash activates the same brain regions as physical pain. That pain is a protection mechanism. It stops you from making stupid decisions. But when you use buy now, pay later, that pain center stays quiet. You get the dopamine hit of the purchase now, the pain of payment comes later, in small installments you barely notice. It's genius, and it's destroying you. Here's the hidden math of a typical BNPL purchase. $800 laptop, 4 easy payments of $200. You miss one payment, $35 late fee. Interest kicks in, 25% APR. Total cost, $950. Opportunity cost, if invested, is $2,280 over 10 years. But here's the real trap. BNPL makes you spend 20 to 40% more than you would with cash. Why? Because it doesn't feel like spending. You're essentially taking out a microloan for a pair of sneakers. And the companies know this. They're not in the lending business. They're in the behavior manipulation business. They've removed the psychological brake that stops you from overspending. The third technique is the pavement princess status trap. Let's talk about trucks, specifically $70,000 trucks that never leave pavement and never haul anything heavier than groceries. This is status signaling at its most expensive. And here's the hidden math that dealerships will never show you at delivery. $70,000 truck, 7-year loan at 6.5% equals $1,062 per month. Total payments, $89,280. Insurance premium increase of $200 per month equals $16,800 over 7 years. Gas, 18 mpg versus 30 mpg equals $2,400 per year equals $16,800 over 7 years. Maintenance, $3,000 extra over 7 years. Total 7-year cost is $125,808. But wait, let's calculate the opportunity cost. What happens if you bought a $25,000 reliable sedan and invested the difference? $1,268,000. That truck didn't cost you $70,000. It cost you over $1 million in retirement wealth. But here's why this trap works. We're biologically wired for status competition. In our ancestral environment, status equals survival and reproduction, and companies have hijacked that biological imperative and attached it to products. You're not buying a truck, you're buying the feeling of status. The problem? That feeling depreciates faster than the truck does, which, by the way, loses 20% of its value the second you drive off the lot. This is the pavement princess phenomenon. Expensive vehicles used to signal success to people you don't even like, paid for with money you don't have, destroying wealth you desperately need. The fourth technique is the commuter trap. The job pays $60,000, but it's an hour away. Totally worth it, right? Wrong. Let's do the hidden math that no one shows you during the job offer. 1 hour commute equals 2 hours per day round trip. 5 days a week times 50 weeks equals 500 hours per year. Gas equals $350 per month equals $4,200 per year. Vehicle depreciation equals $4,000 per year. Maintenance equals $1,500 per year. Insurance equals $300 per year. Tolls and parking equals $1,200 per year. Total time cost at $30 an hour equals 500 hours times $30 equals $15,000. Total annual cost is $26,200. Your $60,000 job is actually a $33,800 job. But companies have convinced you to measure job value by the salary number alone. They don't factor in life cost, the invisible tax on your time, your vehicle, your stress levels, and your family time. Here's the manipulation. They've normalized the idea that you should absorb the cost of getting to their location. They've made it seem like commuting is just part of working. It's not. It's a transfer of cost from employer to employee, and you're accepting it without negotiation. The commuter trap keeps you poor in 2 ways. First, the direct financial cost. Second, the time cost, those 500 hours you could have spent building a side income, learning a skill, or being with family. The fifth technique is the fake rich illusion. Welcome to the era of being quietly broke. You look rich on Instagram, but you're 3 paychecks from homelessness. This manipulation technique is called aspirational marketing, and it's everywhere. The message is simple. Successful people have these things. You want to be successful, right? Better buy these things. The hidden math of looking rich is this. Designer clothing equals $500 per month equals $6,000 per year. Luxury dining and bars equals $400 per month equals $4,800 per year. Latest phone upgrade equals $1,200 per year. Premium experiences, concerts, travel equals $3,000 per year. Total, $15,000 per year. 30-year opportunity cost, $1,700,000. You just spent $1.7 million on the appearance of success instead of actual financial security. But here's the psychological hook. It works because of social proof, a cognitive bias where we determine what's correct based on what others are doing. When everyone around you is posting their wins, their purchases, their experiences, your brain interprets that as normal. The truth is, they're broke too. 78% of Americans live paycheck to paycheck, including people making 6 figures. But nobody posts their credit card statements on Instagram. Text overlay, real wealth whispers, fake wealth screams. The company selling you this lifestyle knows something you don't. True wealthy people don't dress like Instagram says wealthy people dress. The real millionaires are driving used Toyota Camrys and wearing $30 jeans. They understand opportunity cost. You're being sold the costume of wealth, not the substance, and every dollar you spend on the costume is a dollar that can't work for you. The 6th technique is silent shadow fees. Let's talk about the charges you don't even notice, the ones that don't show up in your mental accounting, the shadow tax.
ATM fees, bank account maintenance, overdraft fees, credit card foreign transaction fees, payment processing fees, service convenience fees. Total 30-year cost with investment opportunity is $58,800. These fees are designed to be just below your pain threshold, the psychological point where you'd actually complain or switch providers. They're small enough to ignore individually, but collectively they're devastating. Here's the manipulation. Companies have learned that humans think in nominal terms, not percentage terms. A $3 fee doesn't feel like much, but if I told you that you're paying a 300% premium to access your own money, you'd be furious. And that's exactly what you're doing. These shadow fees are pure profit for companies and pure loss for people who aren't paying attention. The solution? Become aware. Track every fee for 1 month. You'll be shocked. Then eliminate them systematically. Free checking accounts exist.